Hello everyone and welcome to my morning report analysis videos on Friday 1st of February with me, which is Market Analyst at Hantec Markets. It is Payrolls Friday today, but also first day of the month is PMIs as well. So we've got a lot that's actually moving around on markets today, and it's interesting that we've actually had a fairly settled look to the outlook today. What we've seen in the last sort of 12 hours or so is that the dollar has sort of stabilised a little bit and just started to sort of tick a shade higher. Now that's despite the fact that we've still got falling yields actually in the States. So falling away, that's going to keep that under pressure. So whether the dollar starts to sort of dissipate, or that dollar rally starts to dissipate a touch, will be interesting. As I said, you've got payrolls, but the big move, I think, the reason why the dollar has sort of managed to unwind that weakness has been through the China PMI. Certainly didn't help. Worse than expected on the occasion. PMI for manufacturing down to 48.3. That's deep into contraction territory now, and that certainly has hit the Chinese yuan today. Strong rebound on the dollar yuan, so that has certainly helped the US dollar rally that we've seen. And they've sort of dragged the euro dollar back from 15 figure. I'll talk about the implications of that. It's sort of seen the gold price fall over a little bit as well. Equities are fairly steady, fairly stable. You had sort of gains on the S&P 500 yesterday. Dow actually was down, but futures on Wall Street are basically flat on the day. Fairly steady, and that's pretty much what we've seen in European markets today. Fairly steady outlook. I mean, this is all coming ahead of payrolls report later. I've got a payrolls webinar, so you can sign up to that on our website. But just in front of this payrolls report, it'd be interesting to see whether the markets actually move around on the payrolls today, because obviously the data is not especially clean following on from that US government shutdown. So how the markets respond later today will be interesting. But you've got the ISM data, and actually we're getting PMIs out throughout Europe early morning today, but obviously into the US this afternoon. The ISM data will be important as well. Now, just a quick summary: you had Japanese PMI falling back to 50.3, so only a shade above only a shade in expansion territory there. You could argue that UK at 52.8 is not the worst number in the world, considering Brexit and obviously global economic downturn that seems to be cyclically downturn, seems to be taking hold now, and obviously Eurozone data at 50.5. So US data this afternoon expected to be 54.2, down 54.3 last month. So yeah, a quick look at payrolls numbers. 165 on the headline, 3.2 on the average hourly earnings expected there. Okay, so my chart of the day is dollar Canadian. Now, what we've seen in recent times is the Canadian dollar strengthening. US dollar weakening, Canadian dollar strengthening, and coming at the same time as the oil price sort of seeming to try to break out as well. That all adds up to dollar CAD falling over. Head and shoulders top, dating back to mid-November. Breaking below that reaction low at 31.60. So that is a neckline of a top pattern. So it's the first real sign that we've had in a while of a corrective move. And look at the momentum indicators, the MACD lines, bear kiss falling away, stochastics falling away, RSI. Negative configuration as well. So it would suggest selling into strength on dollar CAD now. You've got that neckline at 31.60 up towards the reaction at 32 figure. Nice little 40 pip band of sell zone there. Also, I'd like to point this out that I talked about in the morning report. 21-day moving average, having been supportive on the way up, turned over and is now a basis of resistance. That's at 32.60. So I've expected to see a little bit of a sort of a resistance area around sort of 31.60 to 32 figure, but need a decisive move, I think, above that reaction high at 32.85 to really suggest that the market is rolling over, and that would suggest that the market is in recovery mode, and the corrective outlook is sort of losing ground. But for now, certainly this topping pattern is a negative pattern, and it certainly suggests sort of downside pressure is growing. It would be hand in hand, I think, with a rising oil price. So that would be interesting to watch. 130.50 and 130.45, those November lows look to be next on the agenda, and then you sort of move towards the mid-October low 29.10. So it certainly looks as though this is a growing correction on dollar CAD. Would be in line with the dovish Fed and the dollar correction as well. So that would be interesting to see if this does start to come through. So I wish you good luck in your trading today, and I will speak to you later.